What's up, everybody? Welcome to Heresy Financial. Happy Friday, except for every one of us holding gold, silver, or miners. They just got absolutely hammered today, with gold closing the day down over 3%. Silver closed the day today down 6.5%. And the gold miners index closed down almost 5%. So that was off the lows. They rebounded a little bit from the lows there. I think silver at one point was down almost 9%, gold 4%, but bounced off the lows a little bit, and gold closing here at 1850 here. So if you take a look at a chart, that is some good historical support there. So it kind of makes sense that you come down, you rebound a little bit, and you're going to close there. Same thing with silver, closed real near some good support there. So who knows what Monday will bring, and ultimately what we're going to look at is what caused this sell-off, and why is there some of this really weird pricing and market action going on right now in the markets. Ready? Let's dive in. Now, I say this is strange market action simply because this morning, on Friday, it was announced that that Biden is trying to, in his first couple of days in office, he's going to try and push through a $3 trillion potentially, or maybe even larger, stimulus package. Stephanie Kelton, she wrote the book on modern monetary theory, and she's calling for a $5 trillion package. So we're basically all in it now that we know what the official next couple of years is going to look like from a political standpoint, with it basically Democrats controlling all three, the House, the Senate, and the White House. And so with this outlook in mind, there's just going to be a ton of spending. And so that's why some of the price action, especially today, looked a little bit odd, a little bit unnatural. We had the dollar actually rise a little bit today, while at the same time we had the yield curve steepening. And so short-term yields dropped, long-term yields rose. And so we've got this steepening of the yield curve. And then at the same time, we have precious metals selling off. And so really, this is some strange market action going on. We had, and in addition to that, just the equity markets, we had just kind of a volatile day here coming into the end of the week. So on one hand, you could look at this and say, hey, there's something going on behind the scenes, which is possible. Some things that are starting to unfold that we haven't, don't know about yet. I know right before, like the repo market fiasco back in September of 2019, when that happened, there were some, right that day that it happened overnight, that the rates spiked, and everybody at once tried to start figuring out what is going on here and why did this happen. And so whenever you have weird price action happen, correlations or the lack of correlations that are usually there happening, it could be an indication that something something abnormal is going on behind the scenes. So yet to be seen here, but specifically I want to spend the rest of the video looking at precious metals, because that's really I know what a lot of us have a lot of our money invested in, and it starts to beg the question: is there a mistake going on here? Is this our people, our institutions, our central banks, our large investors selling their gold? And especially in light of what Bitcoin has been doing recently. Currently, as of recording this, Bitcoin is 40,600. And so with the rise in Bitcoin and with the just the price really volatility, and every time gold and silver get up to kind of right here, this level, they get smashed back down again. More and more what this is looking like to me is it looks like a currency defense play, and not specifically, not directly like a currency defense, but all throughout the last especially the last like 200 years, when there were not gold standards, but there were gold exchange standards around the world, where you had government paper issued, and that government paper was redeemable for a certain amount of gold, whether it was by individuals or by large institutions or other countries. At some level, that paper was redeemable for a certain amount of gold, and governments would always only hold a fraction of that actual gold in reserve, so they'd always print more money. And usually it was above board, it was stated, like people knew, hey, the Federal Reserve has 40% of the gold that would be needed if everybody started redeeming their dollars for gold. But with the ability to print more, there's always the temptation and the leeway to go a little bit further, and pretty soon the expansion of the money supply, people start to catch on. They start to redeem those dollars for gold, or in the case of whatever currency is going on at that time. And also, it doesn't even have to be gold. There are countries that have pegged their currencies to other currencies that they can't control, and a similar thing happens. There's a peg that is too tight compared to the amount of money that the government had printed, because they want to spend the money, but they don't have the ability to raise that income through taxes or borrowing, and so they just do it by printing. Pretty soon soon the market catches on and realizes they don't have the amount of stuff to redeem that they say they do. And so it sparked kind of a run on the bank. This is what happened when George Soros broke the Bank of England. He essentially realized they didn't have the necessary stuff to back up the peg that they were trying to defend. And so what that does when a central bank or a government is trying to defend a peg, whether it's to gold or another currency, they have to continue to redeem anybody who wants to redeem at that current price to maintain the illusion that that peg can be held. And they have to continue to print in order to do so. Well, the problem is that accelerates the really the breaking of the peg, and it makes that breaking worse when it actually happens. Just look at what the price of gold did following the closing of the gold window in 1971 by Nixon. All of a sudden, the market realizes the manipulation and the real fair value price of whatever that commodity was, whether it was another currency or whether it was gold. The market really all of a sudden snaps to what it should be, and all of that selling pressure that was keeping it artificially low, it breaks forth, and that pressure that's been building for a while just explodes upwards. So who's doing this with gold right now? Well, it's the bullion banks. And if you take a look at this chart, we can see here that the net short position has not gotten better, and they've actually been slightly increasing their shorts in the gold market. And so over the last week or so, that's been one of the driving factors in hammering down the price of gold. And it's really at a point now where it's almost like they're definitely insolvent. And so at any effort by any of them to try and close out these shorts, remember, I always say this, when you close out a short, you have to buy it. When you buy something and you were a huge seller of it before, that means selling pressure is going away from the market, new buying pressure is coming in. And so all of a sudden you have a supply dynamic, massive shift, and that really starts to drive that price up really quickly. And since they're so net short, that means that if the price goes up, that's actually bad for them because they're short. They need the price to go down for those trades to be profitable. And so as they try and close out those trades, it actually makes their losses worse. So they're in this position right now that really looks like a very similar position that governments and central banks have been in the past, where it's like, hey, we just have to kind of double down and triple down and quadruple down on this strategy and hope that the market kind of backs away and that the market stops asking for delivery. Because LBMA, they have almost no gold. They recently came out and said they have something over 9,000 tons of gold, but then when you look at the numbers, the vast majority of that is actually gold that is held in reserves for other institutions or countries that already have a claim on that gold. So the amount of gold that's actually liquid for delivery is very, very small of the amount that LBMA has. And so as at some point, and I don't know when it will happen, it should happen any time now, but at some point it breaks. This breaks because there's too many people, and standing for delivery in 2020 was a great example of that. 2019 had a lot of people and a lot of, a big jump in delivery requests in gold. 2020 just dwarfed 2019's delivery requests. And so the more that trend accelerates, you're going to see at some point this break. And as the prices of gold are artificially held down by issuing more and more paper to try and keep prices down, to try and keep their balance sheets solvent, what that does is it creates a massive, almost a once in a lifetime opportunity for anybody who stands for delivery to get it at a price that is artificially low because they're trying to keep their losses down. They're trying to they're playing chicken with the market, trying to say, hey, you back down and we're just going to go as long as we can, and if this doesn't make the market back down, then we go bust. And so ultimately that's kind of the end game here. And what it looks like more and more as time goes on, this kind of game will continue where the price of gold will start to go up and it'll get hammered, go up, get hammered. But at some point it will break, and potentially even overnight, you could see gold just go no ask. Because if gold goes, to 2,100, 2,200, 2,300, 2,400, and the only major sellers in the system were the paper traders, were the bullion banks, the gold trading desks, and that evaporates because they can no longer sell. They're having to close their losses, and they're all trying to buy gold, and all the gold has already been, all the contracts have been already delivered on, and the physical supply has been dried up. Ultimately, that means the market could go no ask, and it literally could go to any price overnight, 3,000, 4,000, 5,000 within the span of just a couple of days, as the market tries to absorb the shock of the lid just popping off and all the pressure coming out at once. And especially when you have, just like is happening in Bitcoin right now, when you have price action and price movements like that, it starts to attract attention, and other people start to buy and try and jump on the bandwagon, fear of missing out before it's too late. And so that's what it looks like to me is going on. But ultimately, risk management. This is one of those reasons why I always say that risk management is so critical. And if you remember, a couple months ago, I think it was in November when I told you guys that I had just drastically increased my position in gold miners. This is one of the reasons why it's so critical to have hedges and protection on your positions, because even with the downward move today, the offsetting increase in the value of my puts really just sheltered me from the decline in the value of my miners. And so right now, as of this time, I'm currently sitting at just over 0.5% gain on my overall position, which again is not as good as it would have been if I would have just gone straight long with no protection. But number one, you don't have to worry about getting stopped out or getting whipsawed if it comes down and hits the price and you sell out and then it just goes to the moon from there. You don't have to worry about that. If it goes to zero, you don't have to worry about that, because the offsetting increase in value from your hedge will protect you from that. And ultimately, you're going to pay more for the position overall, really is how you can look at it. And so you need a larger increase in order for you to break even or profit. But ultimately, right now, even with the sell-off and then the rebound, sitting at a little bit of over 0.5% gain, just in case any of you guys are wondering how that position is turning out. And yes, I'm still holding. So that's all. That's what I've been looking at today, and hope that makes sense. Let me know if you have any questions or thoughts in the comments section below. And as always, really appreciate you guys. Have a great day.